Hey everyone here, thanks for tuning in to our YouTube channel once again. We're here if you want any updates of what's going on in the real estate market, we have it. And we have, once again, Vincenzo, the one and only, right beside me, going to break down the numbers. We get a lot of questions. People are calling us, what's going on with the mortgage rates? And Vince is the guy. He knows everything. He's got the inside of everything you're looking for. Once again, level 2 agent. He's access to A lenders, B lenders, private lenders, C lenders, every lenders you can think about. Vince has access to these people and he can help you out. If you're looking to refinance, first-time home buyer, or you're looking to invest, Vince is here. He's going to break down everything you need to know, what the forecast and what we expect coming in the future. And the announcement, we're going to break down what we forecast is going to happen this week. Interest rate cut. It could be 0.25 basis points or 0.5 basis points, and we'll talk about that shortly. So tune in. We're going to Vince coming in here shortly. Well, I got Vince here. Vince is going to come right in here. He's going to break down all this information. It's going to be knowledge is power, and it's information that everyone needs to know. What you're going to do, expectation for your renewals, looking to purchase, or your first-time home buyer or an investor. Vince has access to all this information and information you need to know. And you need to know what you're going to be doing the next 3 months if you're in that bracket. And he's definitely going to break all this stuff down to you.
Hey guys, welcome back to the YouTube channel. This is Vince here, mortgage agent level 2 with The Money Mint. I'm working all over Ontario, specializing from all the way west like Hamilton, going all the way east towards Toronto, Scarborough. I cover it all, I do it all. So let's just get right into the numbers. Here is a table. I'm going to go over the fixed side first, and then I will shift my face over to the other side, and then we'll talk about the variable numbers. So looking at these numbers here, this is before the rate drop on April 16th, and these are the lowest A lender rates that I have available at this time. Starting with a 5-year fixed insured. Insured files mean it is down payment of less than 20% of the purchase price. We have Meridian, is an A lender. They are sitting at 3.89%, followed by Neo Financial at 3.94%. And then we have a couple of lenders sitting at 3.99%. RFA is the first one, and Marathon Mortgage Corp is the next one. These rates are for 5-year fixed insured. Again, down payment less than 20%. The next set of rates is for 5-year fixed conventional. Conventional means it is a down payment more than 20%. So again, we have Neo Financial. They come up at 4.19. followed by MCAN 4.29, and we have a couple of lenders at 4.44. We have B2B Mortgage, they're on this list before. First National, I'm sure many of you know of First National or have heard of them, and Lendwise, another smaller Schedule 1A lender that is in the same level as TD, Scotiabank, CIBC. Actually, all of these lenders on this table are at the same level as a TD, Scotiabank. You just don't hear about them as much because most of these lenders don't have a physical location or branch to go in, which is why you may not have heard of them before, but they are all the same level as your top 5 banks in Canada. So to summarize, the 5-year fixed insured rates are looking at high 3%, whereas the 5-year fixed conventional is sitting at low to mid 4% depending on lender. I have now moved my face over here. So now we can see the entire variable side of this table. We're going to start off with the 5-year variable insured side. Keep in mind that the variable rate is prime minus a certain percentage depending on lender, and the current prime rate right now before the April 16th rate drop is 4.95. So the 5-year insured variable rate The lowest rate I have access to is B2B Bank, sitting at prime minus 0.95, followed by Meridian, prime minus 0.91, and then First Ontario Credit Union, another Schedule 1A lender, A lender. They are prime minus 0.75. So the 5-year insured rate for variable is sitting around the mid 4 to 4% range. 5-year variable rate for conventional mortgage, B2B pump comes up again at prime minus 0.45%, TD Bank at prime minus 0.41%, and then Lendwise comes up again at prime minus 0.4. The 5-year variable conventional rate is sitting at somewhere in the mid 4% rate.
Well, everyone, I hope that information is very informative. Knowledge is power. If you need better breakdown numbers and if you have a situation, just comment below, reach out to us here. We'll get you in contact with Vince. He works with our team and only with us. Well, more other people, but we only work with Vince. Sorry, that's what I meant to say. He's the guy. He knows and he can help you in many situations. He's helped many of your clients and anyone else. He's got access to everything and he's got a plan for you. But the main question is we're going to have here, and I'm going to shoot over to Vince. What do you expect that's going to happen on the next announcement, April 16th, from the Bank of Canada? What are you predicting?
Me personally, I'm expecting another rate drop, right? How much it's going to be, whether it's going to be 25 bips or 50 bips, which translates to 0.25% or 0.5%, that is obviously harder to pinpoint, but I do think that they are going to drop the rate. And the reason why I think that is because the Canadian government, during economic uncertainty, will reduce the rate. We saw that during COVID, where they did not know what COVID was going to do to the economy. And currently, with the tariffs and lots of layoffs and Canadian businesses currently under a lot of stress, that is going to cause a lot of economic uncertainty. So I do believe they're going to drop the rates. They want to motivate people to spend, to borrow, to stay afloat. On top of that, we have a lot of renewals coming too. So all those renewals from the COVID time when the rates were 1-2% now have to renew. You're renewing at a rate of about 3-4%. So your payments are going to increase. Your cost of living is going to go up. And they are trying to reduce that right now. Absolutely. So I think it's going to drop.
Oh, and you good point that you pointed out too, though, is a lot of renewals. That's why we see a lot of listings on the market. Like 17,000 listings just came up, and we went through those numbers in our market update. And the last 2 months, they've been coming up and they're soaring. And that's because of the renewals, right? And good point you pointed at. But Vince, good question I want to ask. We did clients, they come and reach out to us, and we do always direct them to you. But the question is, for instance, should they go with a closed open variable, or should they lock it in? What do you recommend? And I think I know this answer, but I want him to answer. He's the guy.
Closed variable, Yuri?
Yes, sorry.
But I would suggest, if our clients, your clients, my clients can afford it, to go with a variable. And the reason why I say that now is because, first, we are anticipating rate drops. Let's take advantage of those rate drops. The rate goes down, your variable rate will also go down, or should go down as well, right? And the second reason is because you can lock in the fixed rate whenever you want. It is a one-way street. You can only go from variable to fixed. You cannot go from fixed to variable. So you get let's say tomorrow is when you get your rate, qualify for the variable rate with me. I let you know, we're all good. You can take advantage of the next couple of rate drops, right? Come at the end of the year, things are changing. You hear the rates aren't dropping anymore. In fact, they might go up. Lock in that fixed rate. It'll be even lower than what your fixed rate was when you originally applied. That way you were taking advantage of the rate drops, and we have some level of security once we have uncertain or news that we don't like.
Well, that was great. Thanks for divulging that information. And you know what? And that's the great, and that's take advantage of it. We have Vince here. Great time. You want to talk to him about that? He has very knowledgeable in what you should be doing, and he'll give you a plan of what you need to be doing if you're running into renewals, or you're looking to purchase, or you're looking to refinance, or if you're an investor, right? So thank you, Vince. Appreciate that.
Yuri, I have a question for you, actually.
Go right ahead, Vince. I'm
Given
always
the
here.
nice weather in the spring market, how do you think the market's going to react with a rate drop and with the weather getting nice, seeing as spring is one of the more busier time for real estate?
Great question, Vince. And I do think if the rate, I think people are on the fence right now. We saw it over the years with the last 6 months. We did see that every time the big rate cut happened in December, buyers were holding on the fence, and we see them coming off, and we've seen a lot of listings go off the market. If you overprice your house, well, your house is probably still in the market. So I can't help you there. I keep saying price it right, but at the end of the day, the homeowners think it's 2021, which is not. I think the rate announcement, there's buyers sitting on the fence. That's why you have a big influx of listings too that carried over from February into the March market. It's carried over to this market right now in April. I think once we know who's in, elections is taking, what we know who becomes PM, and the elections are done, and this rate cut, I think people will be more inclined. They'll be jumping back into the market, and they'll have more motivation to get in, and then I guess they have clarity what's going to happen and come foreseeable future for us here in Canada. But I think the rate cut will get buyers off the fence. They'll take advantage of it. We'll see listings going, and I think the spring market, you're going to see a lot more buyers coming into the market.
Thank you, Yuri. That was great.
Well, Vince, that was great. I have a question for you. I know with tariffs being on a pause, the rate announcement coming on, the election coming on, what do you recommend for people out there what they should be doing to protect themselves or going forward in this market?
Great question, Yuri. What I tell all my clients that are looking to get in the market, especially buy their first home, is to focus on what you can control. Like Yuri just said, the tariffs, the election, who's going to be our next leader, even the rate drop, we can't control that. But what we can control is what we should focus on. The things that we can control is what we should put our energy towards. And the three things, the first thing, the big one, is debt. A lot of people in the past couple of years have taken on a lot of debt. So managing it, reducing it, even coming up with a strategy to help pay off that debt sooner will greatly impact your ability to borrow or just your overall quality of life in the future. The next one I suggest is working on your down payment, or in this case, a savings account, whether it's emergency rainy day fund or your down payment for your first purchase. Focus on putting money into those accounts as well. And the last one is your income. Times like this, you increase your income is ideal, but at least maintaining a steady income throughout the entire process for one, quality of life, and two, to strengthen your application. So Yuri, I think it's going to be a 0.25% rate drop, or in my terms, 25 bips. What do you think they're going to drop the rate to?
Well, I think it's going to be 0.5 basis point. And if he was smart, I think it's great to do that. I get the economy going. I nailed the last one in December, and I think it's good. I think it's going to be healthy if he does. Don't hold me on it, but I think it'll be the market needs it. I think 0.5 basis points just brings a lot of confidence with buyers and stuff in the economy, and it'll get the economy going. That's my opinion, and hold me on it. We'll find out shortly. But I think it's good. I think 0.5 basis points is what I'm leaning on right there, Vince. And today in the market, it's uncertainty, right? You never know, and I think it's good. I think we need it. And listen, if you're new to the channel, hit the subscribe button so you never miss what's going on in the real estate market from a mortgage perspective. At least it keeps you updated at all times. And the real estate update, like here, we give tips and stuff in the market for sellers, buyers, or investors. And I think that well, everyone, I hope that helped out. I hope that was very informative. Information is knowledge is power, and this is key in today's market. Everything's switching very fast, and it's very unpredictable sometimes. Every quarter, something's happening, right? So if you're new to the channel, hit the subscribe button so you never miss what's going on in the real estate market for tips or any mortgage information tips that Vince has given us. If you need more, if you want to get in contact with Vince, hit the comment below, reach out to us. We'll get you in contact with him. He's our guy. He's got a plan for everything. He can definitely help you out. Once again, if you want to know what's going on in your market, reach out to us here too, the Bekavac team. We'll get that information. And once again, thanks for tuning in, and wait for our next YouTube video that comes out.
Everything we touch turns to soul.